Still parking your money in bank FDs? Discover why liquid funds could be the smarter, more rewarding choice for your short-term investments. For decades, bank fixed deposits, FDs, have been a preferred choice in India for parking short-term funds. However, liquid funds are now emerging as a compelling alternative. Offering higher returns, superior liquidity, and better tax efficiency, liquid funds are becoming an attractive option for investors seeking to optimize their short-term investments. Understanding liquid funds. Liquid funds are a type of mutual fund that invests primarily in highly liquid short-term debt securities. These include treasury bills, commercial papers, and certificates of deposit. Because these funds invest in instruments with short maturities, they are relatively stable and offer quick access to cash. For instance, if you invest in a liquid fund today, your money is typically invested in securities that mature within 91 days, ensuring both safety and liquidity. Key advantages of liquid funds over bank deposits. 1. Potential for higher returns. Bank deposits offer a fixed rate of interest, but liquid funds have the potential to generate higher returns by investing in high-quality, short-term debt instruments. Although market-dependent and not guaranteed, historical data shows returns in the range of 5 to 7% over the past 3 years. Example: if you invest 1 lakh rupees in a liquid fund, you might earn around 5,000 to 7,000 rupees annually, compared to 3,000 to 4,000 rupees from an FD. 2. Superior liquidity and flexibility. Liquid funds are designed for quick access. You can redeem your investment anytime, with the proceeds typically credited within 24 hours. In contrast, bank FDs often come with lock-in periods. Premature withdrawal can result in reduced interest or penalty charges. Imagine facing an emergency and needing immediate funds. Liquid funds ensure you have quick access without penalties. 3. Tax efficiency. Interest from FDs is taxed according to your income tax slab, reducing net returns for those in higher tax brackets. Gains from liquid funds are taxed at slab rate. 4. Ideal for emergency funds. The ease of withdrawal and relatively stable returns make liquid funds an excellent option for emergency funds. If you need to cover unexpected medical expenses, liquid funds allow you to access your money quickly and without penalties. 5. Low exit loads. Most liquid funds either charge minimal or no exit load after a specific period, meaning more of your returns stay in your pocket. Unlike some investment schemes that deduct significant amounts on early withdrawal, liquid funds offer a cost-effective exit option. Top-performing liquid funds. Some of the leading liquid funds in India include Data as on March 2025, Mahindra Manulife Liquid Fund, Aditya Birla Sun Life Liquid Fund, Quant Liquid Fund. These funds have consistently delivered competitive returns. However, always consult a financial advisor before investing to align choices with your financial goals. Conclusion. In summary, liquid funds offer several advantages over traditional bank deposits. They provide the potential for higher returns, better liquidity, tax efficiency, suitability as emergency funds, and lower exit costs. Understanding these benefits can help you make informed investment decisions and optimize returns on your short-term funds. Disclaimer: mutual fund investments are subject to market risks. Please read all scheme-related documents carefully before investing. If you found this video valuable, please hit the like button and subscribe to the channel, and set the bell icon to all for notifications. Feel free to leave a respectful comment. Vulgar or inappropriate comments will be blocked. See you in the next video.